Good evening, sir. Yeah,
Good evening, Aman.
yeah, good evening, sir. I'm just waiting for Mr. Kohli to join.
Yeah.
Uh, Thank you very much, sir, for taking out time.
No, not at all. Anything,
Yeah, we've
Aman.
been having a great panel discussion for the last almost 2 days. Yeah, and sir, so this one we are specifically focusing on the emerging opportunities, the financing opportunities in India, and how is the landscape evolving? What are the new opportunities that are coming? And we have with us Mr. Kohli also now. So I'll just start with a brief introduction yeah. So a very good morning to everyone in the US. Good evening to our friends back in India, and greetings to all the audience joining us from the rest of the world. Today, I, on behalf of India Business Conference, Columbia Business School, feel honored to welcome an extremely eminent panel with Mr. Amitabh Kant, CEO Niti Aayog. He should be joining us shortly. He's just been caught up in some urgent meeting back in India. Mr. Manoj Kohli, the country head of Softbank India, and Mr. Bharat, Kaushal, MD and Hitachi India. I shall keep the introduction very brief, especially for those who are not much familiar with the Indian market, because this can go on endlessly. Mr. Kohli currently serves as the country head Softbank India, supporting Softbank Group and Vision Fund as one of the largest investors of $14 billion in over 20 AI-focused portfolio companies in India. Previously, Sir was the managing director and CEO of Bharti Airtel, India's second largest telecom operator, for operations in 20 countries in Asia and Africa. Mr. Bharat Kaushal, also my previous boss and my life mentor. Sir is the first and foremost proud senior alum from SIPA 98 batch. Mr. Kaushal currently serves as the MD of Hitachi Group in India. Hitachi, the Japanese conglomerate, is one of the biggest direct investors come employer, global multinational firm with presence across different business facets in India. Prior to Hitachi, Mr. Kaushal was the chairman and CEO of SMBC Corporation's banking operations in India. Welcome, both of you. And I pass on to Mr. Kaushal to steer the conversation forward.
Thank you, Aman. And ladies and gentlemen, very good morning to those joining from India. Good evening. It is my very deep privilege to be part of this forum. Amidst such a distinguished panel, co-panelist list of Mr. Amitabh Kant, CEO of Niti Aayog. I hope he joins soon, because he spearheads the Prime Minister's think tank, and perhaps one of the most visible champions of a young demography's superpower aspiration. And Mr. Manoj Kohli, my very dear friend and guru in many ways too, has personally nurtured the big telecom revolution in India. And as CEO, and at that time, Aman, I must say, this Airtel has been always the largest company till recently, and also heads Softbank, which is easily one of the most formidable investors in the India growth story. At the outset, I mean, India is the fastest growing large economy on the planet. I mean, the liberalization initiatives of the government of India, which were unleashed in 1991 and got endorsed in 2003 when Goldman came with the celebrated BRICS report, it started to convert the complexity of doing business in India into an attractive investment opportunity. At that time in 2003, the drivers were service sector and the rising middle class numbers. And what has happened since 2003 is that one has seen very heightened pace of activity. Several spaces have seen significant and intense economic activity, whether it's infrastructure or manufacturing or digital and technology-driven businesses, providing many opportunities for private and public capital to flow. And in the same period of these 20 years, the world's seen extraordinary and largely progressive disruptions. The economic landscape all over the world is getting redefined by green transformation, or GX as it's called, digital transformation, DX, innovation. Balance sheets are now talking about triple bottom lines, with environmental value and social values getting added to economic value. And also business models are going beyond conventional wisdom of revenues and profit to aggregating experiences and also chasing the soaring valuations that are now there for opportunities. So let me just at least set the growth narrative first. I mean, India has completed its financial year 2 days ago, and the economy is already past the pre-COVID levels, well past the pre-COVID levels. Fiscal deficit has been impressively contained at good levels. There is $75 billion of foreign investment that has been clogged. Foreign exchange reserves are at $600 billion plus. Merchandise exports have hit a record level of $400 billion. And also tax collections, especially goods and services tax, have set a new record. It is in this context that I would like to invite Mr. Kohli to share in absolute terms within these big growth drivers of India, what does he see over the next decade or the ensuing decade?
Thank you, Bharat, and thank you, Aman. I'd like to welcome all the participants, all the audience of this session in US, in India, and wherever they are in the world. I think we know, and there is a confidence across this country, that this decade of 2030 will be the golden decade of India. Now, that said, it's important to understand why it will be a golden decade for India, because there are multiple transformations going on in the industry. There's such big transformations which no other country has undergone, which are happening today. And it is not only from a 3 trillion economy to 5 trillion and then going up to maybe 6, 7, 8 trillion economy. But more importantly, our per capita GDP is low. And that is the real bad news, which we have to convert into good news in this decade. Because $2,000 has to go to $5,000, $10,000 in the next 10 to 15 years. And that is a big, big aspiration of every Indian. And I believe that if we grow at a steady pace, which I think we should, of steady pace of 7 to 8% per annum, which is realistic, which is possible, then reaching to these numbers is definitely possible. Now, I don't think any other country is growing at this pace and with this kind of diversity. I think it's more important to understand what kind of diversity India is growing with by outpacing the earlier growths, by transforming the corporate governance, by transforming how we look at various industries. And Bharat, I was thinking, can I share some ideas on specific sectors at this stage?
Yes, I mean, we are going to come to that too. I mean, you know, the key growth drivers which define it, and the one that you're leading more specifically, you know, digital with scale.
Yeah, growth drivers, I felt there are 3 big growth drivers which normally a country has to adopt. It's talent, technology, and funding. And luckily, I can tell you, India's talent is a winning talent. The young India, the youth of India, the millennium generation of India, girls and boys coming out of small towns and villages, are hungry to win. And I think that is very, very important for this country to win across the world. Hungry to win, technologically focused on studying AI, machine learning, blockchain, robots, drones, and all technologies which are emanating. And very hungry to do better, lift the country, lift their society, lift their family. The second thing is technology. And luckily, for the first time, I'm seeing that technology is being massified. Earlier, technologies were, I will say, more focused on classes. Now, technologies are focused on masses, which means technologies are getting into small towns, villages in a big, big way. And I remember telecom, when I was in telecom sector, we took 3G, 4G to 6 lakh villages at the lowest tariff of the world. And that's why the data usage of India is the highest in the world. So this is one example of massification of technology. And much more is happening now, whether digital technology, and fintech is another example, where it's massified. We are number one beyond any country in the world, because there is a trust on financial transactions on phone, on the smartphone. There's a trust which has come up in the last 2 years of pandemic, where consumer behavior has changed dramatically by adoption of digital technology. And third, of course, is funding, and we'll talk more about it. But of these three drivers, Bharat, I think talent and technology are available.
Correct.
Funding, we are still building up, and I'm sure in the next 5 to 10 years we'll build up. But that's broadly my view.
Yes, no, thank you very much. Actually, it's very insightful. First point of what you said, I mean, breaking that down into a disruptor, if technology has changed the global economic landscape very, very substantively. In India, there is a case for demonstrating digital with scale. I mean, it may have started with the platform of bank accounts, which were not even, in 2014, I know maybe it was 42% of India which had bank accounts or organized financial services. That went up to nearly 90%. That getting mapped with biometric identity card on the mobile phone. And then came the next generation in 2017 when the unified payment interface came. And I remember from the end part of the previous discussion that was going on, where we were talking about COVID and the adoption of technology. I think we have seen 2 billion vaccinations happening across the country just based on your mobile phone number. You could have done the first one in Delhi and the next one in Coimbatore. You could have been anywhere and you can get this whole thing done. Digital with scale has, of course, you've talked about consumer behavior, but has been one of the most significant game changers. And that will take from India for India and India to the world too.
Absolutely. Absolutely. And I'd like to share some thoughts on some sectors, Bharat, now, because I don't think the world knows the diversity of the transformation India is moving ahead with. And such diversity, I don't think any country in the world has ever gone through at one stroke, in one decade. Yes, they have gone through over many, many decades, but what is happening now is very, very rare. Let me start. Firstly, the post-COVID recovery, as Bharat, you said, is over. And now we are heading to growth, real growth beyond COVID. And I believe that this acceleration has come up very well. Government has been extremely prudent in this recovery process. And as you said, vaccination has been a very, very critical enabler to this recovery. And vaccination is happening now. Even boosters are happening now, doing well, and they're effective. They're all made in India. And that is what makes us proud. When the world was suffering, we are actually exporting. So recovery behind us, let me talk about 5 or 6 sectors. Number one is the traditional sector of agriculture. Now, what people don't know across the world is not only we are self-sufficient in feeding 1.4 billion people, but also we export a lot of food items. Recently, due to this European crisis, a lot of food items, much more exports are being done from India because there's a crisis in Europe. But India, the key thing is India has surplus after feeding 1.4 billion. Now, at the same time, we know that our productivity standards are low. Our mechanization and automation and digitization of agriculture is low. And that is where so many new startups are going into agriculture to digitize it. So I can tell you the best days of agriculture are coming in future. Now, this is after feeding and exporting food, which I think means that India's agriculture will not only grow by a slow rate of 2% to 4%, but actually will grow much faster in the coming years, which is very important because half the population lives there. The second area I'd like to mention is the manufacturing. Now, manufacturing, frankly, was doing very well till about a couple of decades back. Then, because of various geopolitical reasons, it slowed down a bit. But now manufacturing is coming back, and I'd like to really thank the Prime Minister personally, because the Make in India movement initiated it, and now the 17 PLI schemes, the production-linked incentive schemes, which includes storage batteries, which includes semiconductors, which includes such great projects, which actually India will now not only be on its own feet, but also really be very competitive with the world in each of them. And we are good at manufacturing quality. For example, India's auto components are Six Sigma and low cost. That's why they're exporting all over the world. So precision is high, quality is good, cost is okay. And now with these 17 PLI schemes, you will see hundreds and hundreds of global companies from Japan, Korea, US, Europe coming into India and setting up shops. And of course, Indian companies will grow. So manufacturing is heading for a very serious supply chain enhancement from India. The next one, as I notice, is infrastructure. India's physical infrastructure continues to be slow, continues to be weaker than it should be. But the pace which it has picked up now, I don't know if people in US know that roads, we are building 30 kilometers a day highways, which now are being targeted to go up to 50 kilometers a day. And they are really moving well. And there's a commitment which the road minister, Honorable Gadkari Saab, has made that in next 2 years, by 24, Indian roads should be really competitive globally. And that's so important because logistically, India should really move ahead. So infrastructure, we have an outlay of $1.4 trillion. And I don't know how many people know it. The pipeline is very clear. The projects have been identified, 60% government funding, 40% state funding, private sector are participating. So what I'm trying to say, roads, ports, airports, railways, logistics, Gati Shakti project, which is critical because India's logistics has to become much more agile and flexible. Next one, as I see, is exports. As Bharat, you rightly said, it's already touched merchandise export has touched 400 billion. These are not service exports, services over and above, but they are growing very well. From 330, peak of 330 in 2018, it's crossed 400 now and will be much higher in the coming years. So exports strongly picking up. And that's one area where I think India had done not as well as we were capable of doing. And now that capability is showing off. Last but not the least, the software and service sector. Now earlier it was, some people said body shopping, etc., but real software development, real AI, machine learning work. And I really want to thank the young talent, engineering talent, software talent, programmers, coders coming out of small towns and villages and hungry to go global. So the point I'm making is that all these sectors together are building the pace of transformation and also diversity of transformation, which no other country in the world is looking at.
Yes, and I think it is also dramatically altering the rural and urban divide. The pace of urbanization is plus of 25% year on year. The brownfield cities are becoming smart precincts, and a whole lot of logistics combined with with urban infrastructure is bringing a new offline and online complementarity across the frame. And maybe another area where India has a big space to take leadership position is the energy transition environment. You know, it's such a big state. I know you've also headed, being, you know, one of your hats was to be chairman of Softbank Energy, and you know, you've been at the thought leadership level where Government of India formulated this big renewable energy based ecosystem, which went up to the last mile of you know, through channel partners and variety of other public sector companies or state-owned companies for charging stations, energy storage, and those solutions. So added to, I'm just adding to the growth driver list, because it is we are all selling it all day in our respective business fields. But something that both of us are doing together, which is on the startup ecosystem. You know, the first generation of, you know, maybe 49 unicorns made in India in the last one and a half years. Many thanks to you. And I just want to sort of broaden the whole horizon. You know, the large assets still reside on big balance sheets. We are seeing huge valuations come on the other side, where aggregators are doing a magical job of what they're doing as startups becoming unicorns and decacrons. The challenge of 3 trillion embracing innovation with the same speed and then making it 6 trillion or 10 trillion eventually is by making it more mainstream. We are a price sensitive market for the many Indians that live in India. OPEX model is largely emerging. Infrastructure from the core sector, energy, mobility, everything is being offered as a service. The assets reside on large balance sheets, which are still at low return points. And the aggregators have done a great job on the other side, where the B2C part is already connected with them. This new value chain, and for finding the sweet spot, the classic debate of B-School between Disney and Netflix on distributor versus where is the sweet spot, a distributor and content owner, is between the asset owner and the aggregator. Because this has to happen for India to sort of become the bigger and continue to stay as not just a unicorn capital of the world, but also where innovation will lead the 3 trillion becoming there. So maybe you would like to share some of your thoughts too.
No, thank you, Bharat. These were great insights from you. Let me now share two issues with you. One was on the first thing you raised on climate change and renewable energy. And second, I'll come to startups. Now, climate change is a huge focus of government. And personally, Prime Minister Modi, I think, is a global proponent of climate change action. Now, one action is the biggest action is on the energy front, because fossil-based energy is leading to a lot of pollution. And India, that's why, has adopted 500 gigawatt of renewable energy, primarily solar and wind, for 2030. Out of which, fortunately, 100 gigawatt has already been completed and commissioned, which is fantastic, because India's solar potential is unending. And you know, the tariffs are already close to 2.5 rupees, which is one of the lowest in the world, and growing and declining further. And why shouldn't we fully leverage our strength of sunshine rather than pay $110, $120 billion a year of imported oil, gas, and coal? So this is the mission we have as Indians, as Indian government, Indian managers and entrepreneurs. We have to save that $110 to $120 billion over the next 10, 20 years. And this mission has started, the journey has started well. 100 gigawatt of 500 gigawatt has been completed. Another 400 gigawatt is to go. India needs nearly $350 billion for one transformation of renewable energy. So that's the level of funding required by one transformation compared to another 10, which we
I mean,
can talk.
I think just oil and coal alone is an import of $120 billion a year. So,
Yeah, absolutely.
I mean, maybe it's if it's a replacement cost, then, this is a one-time hit with bringing more efficiency and cost savings.
Absolutely. So it is solar, wind, and storage battery. And luckily, PLI scheme includes the storage battery, not only for electric vehicles, but also for solar and wind plants. Because renewable energy has to become round the clock. If renewable energy is not round the clock, it is only intermittent, then it has less value. For full value, it has to be round the clock. Hence, storage battery is important. Therefore, the second action which government is taking very strongly is electric vehicles. And let me share here, we in Softbank have supported Ola Electric, which is one of the largest EV companies coming up, two-wheeler EV, three-wheeler EV, which are very important for India. Largest population of two-wheeler and three-wheelers are in India in the world. So hence EVs are critical. So the point I'm making is this transformation from fossil to renewable energy, from IC engine to EV, itself will be the biggest transformation of the world based on technology, based on climate change actions. And it requires 400 billion plus of funding over the next 10 years. This is one transformation. Now let me move to the second point you raised, which is more exciting to me, which is the startups. Now, I always believed that India's young entrepreneurial talent is most creative in the world. And I think they are proving to be. These young talent, hungry talent coming from small towns and villages are not only all over India, but all over US, especially West Coast, and many, many other parts of the world. And they are building companies, building brands, building business models, which are most competitive. And Bharat, this is a very important point. The traditional non-competitiveness of India is being overtaken by the competitiveness of the young India, of the youth of India, of the startup India. These startup companies, I want to tell everyone that 90 unicorns now. And if you test out each of these unicorns, they have a very unique business model, which is very lean, very affordable, technology-based, profitable. Secondly, it has a technology base, which is very, very strong tech focus. Thirdly, it has talent, which is again run by average age. I mean, I've been to all, I support about 20, 25 startups in India, and the average age is 26, 27. So I feel very old in these organizations when I go there. But these are great. These are the Indians who will lead India to global leadership. Also these companies have built brands which are very good. And if you look at Olympics, look at cricket, look at 70 to 80% of the brands which are being used are startup brands, and they will go global. So I believe that these startups will become large corporations. The point you made, Bharat, in the next 10 years, because India needs a lot of large corporations. We have very few large corporations in India, and I think that is why the employment struggle happens.
It's also, I think, a path for the legacy systems to, in their chase of agility, as you say, to travel the distance. I mean, ultimately, in a convergence-driven society, a connected society, there's a new architecture which is emerging. You were, as a Hitachi, you were trying to do a metro and a smart EV solution, a city gas and a water solution, a data center operation, which was somewhere centripetally reaching out to that end user connected citizen. And now you have these guys who've done a great job of wrapping around that individual for his own life cycle, maybe education, maybe health, maybe insurance, maybe payments, and enabling them to reach out centrifugally into the same things that are being offered to them as services. And each one of us are in that debate of how much distance to travel where to at least become a beneficiary of this new value chain. So
Absolutely.
it is going to
Absolutely.
bring large capital from these
No,
existing
fintech is
balance.
a great example, Bharat,
Correct.
where what you're saying is so right, that because India didn't have branches, bank branches, India didn't have ATMs, we did the fintech revolution, and therefore the smartphone became the ATM. And luckily, we have 1.3 billion phones, out of which 700 million are smartphones already. So each of these corporations, and I can give one or two examples, like Ola Electric, I've already said, EV company, and it's trying to build a global EV company. Lenskart is an eye care company, coming to your small town and village to give specs, give you contact lenses, etc., etc. Another company, delivery logistics, the fastest, lowest cost delivery in the world. So the point I'm making is these companies are becoming far more competitive vis-a-vis similar corporations in any other part of the world. And therefore, they're going global, their brand's going global is very possible. And that's why we have a mission that we should have hundreds and hundreds of unicorn coming up in the coming 10 years.
You know, we our joint venture partner in the digital space and payments is State Bank of India, which is maybe at that point of reach where perhaps there is no competition in the rural presence of State Bank of India. But we are also nearly 50% market share in the point of sale machines where tokenization is coming and a lot of AI is coming for inventory management. In the ATMs business, especially the cash recycling machines, money is hopping in and hopping out of cash into digital and fintech and hopping it back into mainstream because all points are gradually getting converted. This during COVID, singularly, is a 45 to 50% growth area in terms of adoption levels. And people who have adopted this technology have continued now that everything is opened up and most of the activities have come back to normal. This has not seen a decline. So it's kind of commoditized segments of transaction banking and transaction flows all the way up to digitized new solutions. Volumes have gone up and the flows, circulation of money has also gone up. That's very, very interesting point that you raised. And before I, take this discussion onto just the pure financing elements, I mean, it's incomplete if we talk about growth drivers, but not allude to some of the risks. I mean, both external as well as domestic. And it's the old banker in me, which will never get out, perhaps, to not complete. But the external bit with the geopolitical change. I mean, of course, there was COVID, which happened across the world. There was the trade war, which has impacted the input costs across economies in the world by 50, 60% in certain important cases, and certain things where the entire chain was dependent on, say, a Chinese production house, or the China-US trade has resulted in that. And now Ukraine, where you're seeing sanctions play out differently when it comes to financial flows and differently when it's coming to the energy flows, which is a very important function. So all these are in varying degrees impacting the many Indias that reside in the Indian economy. And then we have our own bits of bringing better engagement into the mainstream economy of a young population and maintaining a balance, sometimes with demand tools and sometimes with supply tools, so that tolerance level and bandwidths of different economic sectors can also live up within and benefit from this. So maybe you would, you've built business and now you are investing in growth. How do you look at risk, both external and domestic?
Bharat, this is a very crucial point you're raising, because as a country, if you go back exactly 24 months, in March, April 20, there were a lot of pundits who were not talking good about India's future. And they felt that the risks India faces are the greatest risks in the world. And maybe they were right. I'm not saying that they were wrong. But I think how Indian government has managed it, how Indian people have managed it, how we as a community, as a family have managed it is remarkable. One is, and today, let me tell you, of all the economies, large economies, we may be one of the most resilient and agile economies after 24 months. Let me give you 2-3 data points. Firstly, this year, we will do 8.5% GDP growth, full recovery. The March GST was 142,000, which is very, very good, which means that this year will be a fantastic growth. The fiscal deficit was 6.9% last year, and this year, 22-23 is expected to be 6.4. Now, 6.4 of such a large economy, maybe slightly high, but I think for this period of last 2 years, if we have come out of this and reducing the fiscal deficit already, I think that's a great news. Exports, as you said rightly, going up dramatically. PE and VC funding, 74 billion, out of which 56% was for young startups. Forex, 620 billion. And the only key issue I feel is the full convertibility which is left. And that I'm sure government will review the pros and cons and take a decision at the right time. But the point I'm making is the last 24 months was the riskiest period in our history. And I think we have come out resilient, we have come out agile, we have come out more confident of how to transform this economy. And I'm not saying that more risks will not come, more geopolitical risks will come, like we are going through at present, and we'll be surprised again and again. So, but as a country, if we are resilient, then I think we will definitely face them and overcome them.
And it's exactly this narrative where we can shift to funding and finance. You know, the point is that the canvas is broad enough. Everyone looks at the lower bandwidth of tolerance of the many economies that constitute the Indian economy. But when you make this big transition, I mean, funding for anything basically means equity and debt. And that can traditionally always mean public investments or private investment, domestic or international, and to some extent compositionally within primary markets, secondary markets. The big question that you just said about capital account convertibility, India is coming to that point where capital account convertibility can change the game of raising more debt, especially when construction risks are lower and only performance risk remains. There are enough stories. I mean, but when you look at capital market and equity, India is in the top 5. We're ahead of, I think, UK, Saudi Arabia, Canada now, at $3+ trillion of equity market size. And there is a very interesting interplay of even domestic institutional investors and retail investors, given that savings was such a big component in the Indian economy. Savings was resting in banks and putting pressure on higher interest rates, which were making it uncompetitive. Savings is transiting towards spending. When people are investing in equity capital market, they are also investing in debt. And the mutual fund for the $1 trillion size of government debt alone and the $2 trillion size of the bond and debt market or $2.5 trillion market is something that was not there was a wrong perception that debt in India is only available in banks, but perhaps we have realized that this whole sleeping but gigantic gorilla has also made significant inroads into the capital market for debt. So this combination, the sovereign fund bit is and sovereign funds participation warrants another attention in which we can. You alluded to corporate governance framework in the beginning, but when you see people feel more secure in making these investments, there are very large flows that come about in capital markets.
Yes, I agree, Bharat. I think what you said is so right. But this again is the funding part is again a transformation of India. And that's why because of the transformation, the funding needs are huge in the next 10 years. And I'm personally feeling that a lot of work has to be done on this, whether it is domestic, whether it's government funding, international debt, etc. A lot of work is happening and much more is required in the next 5 to 10 years. But the point you made on the private sector, I think the funding had dried on the private sector, but now in the last 9 months, it's really come up nearly 3,500 new projects, 174% growth of private sector in 9 months. So private sector in India is coming back. Because earlier the entire load was on government investments. And government also, luckily, the public infrastructure investment is higher by about 5%, $530 billion. And by the way, the capex part, the capex in the government spending is the highest growth of 35%.
Correct.
Which actually is government showing a lot of prudence, because capex, this is the right time to do a capex funding. US had done it at the right time. Germany had done it at the right time. Japan had done it at the right time. And this is the right time for India.
And it's there's a kind of a asset liability situation from a social perspective. Family is the basic unit in India. Intergenerational transfer. There is no social security that existed in the classic sense in the minds of people. They would do savings. And therefore, the bank had to give a higher interest rate. And 87% of bank deposits are less than 5 years. The quantum of 1.4 trillion or the huge interplay with infrastructure requirement was, several schemes have been experimented with, 25-year asset life of infrastructure, and 5-year revolving loans and so on. But unless you free up the bank's balance sheets by evolving a secondary market, a secondary market where construction risk and everything is gone, where you have an asset which is based purely on the commercial performance risk. I mean, I'll give you an example of Delhi Metro. And now Lucknow Metro is also closely chasing the same story. But Delhi Metro was planned for a very long time. It is now one of the largest metro networks. It's nearly 500 kilometers. It transports 35 million people every day. It's a very, very low cost transportation mode when it comes to the capex involved in it. In 2.5 years, Delhi Metro has become operationally profitable. Now, so you have examples battles which have gone into court on the toll roads and various other assets. But reality is that a lot of these assets, the moment they're up and running, there is no market size risk that is available in India. And to exploit it properly, the secondary market, where the de-risking of these assets which are up and running will be the first point to land more sovereign funds, more non-fund asset guarantees, and bundling them. That's also the way a Japan and a US and Macquarie in Australia and Chinese and everyone else has done. We couldn't have done it earlier because we needed the first generation of assets to roll the full term and start delivering. But now the time is coming where secondary markets have to be developed. And once you've spoken about it, I will come to the linking question of asset monetization.
No, absolutely, Bharat, you're right. And the confidence of international investors has gone up because firstly, the foreign exchange rate has been stable, around 75 rupees, which is, and in the last 2 years, which were tough years for world economy. But despite that, our exchange rate has been stable and maybe one of the best in the world. And our external debt is only 20% of GDP, which is very, very important that, our debt condition is reasonable. And another very, very important shift which is happening now in the retail investment in India, investors in India. Nearly 4.8% of household balance sheet is going into investment, equity investment into stock markets. We are, as you rightly said, we are the top 5 in the world. already, the National Stock Exchange. They are the largest in derivatives markets in the world. Mutual funds are very consistently growing. Demat accounts, Bharat, I think this is one of the key determinants of future growth. In December quarter, there was a 10.2 million growth of demat accounts, and total demats are 80.6 million, which clearly means we are heading towards 100 million very soon in this financial year, new financial year. Retail investor class is 43% of the primary turnover. Shareholding of retail investors, retail is more than 7%. The retail investor inflow into market was 19 billion last year, and FII sale was 7 billion. So clearly it means that retail investors are critical now for stock market and for future investments. And I think that's a very, very important change. Earlier, I remember global investors used to say that Indian domestic market doesn't respect or recognize the domestic businesses, especially the new businesses, new startups. Now that is changing because the retail and let's say the domestic market is really emerging as a very strong play. And not that it has become very strong already. No, it is still in work in progress. I'm sure in the next 5 to 10 years, Indian stock markets have to become maybe from number 5 to number 3 in the world. Also, the international equity investments, the international investors have stayed invested in India in the last 2 years because of stable rupee. I think that's a very, very important. And now with exports going up to more than 400 billion, this position will further improve.
And in fact, for the quantum of money, I'm sorry, you were saying something, but I can't resist the temptation of adding this point that we alluded to of capital account convertibility. There is actually more suspended aspiration outside in other markets as we start listing Indian classes of opportunities and assets in overseas exchanges, as the large economies have done, to first start attracting bundled fixed income assets. And then you sort of wait for maturing of secondary market, where the interplay of capital market and banking, comes to another level, to the advantage of the industry and, of course, competitive for the society.
Absolutely, I fully agree. And here I like to highlight the major opportunity for international equity investors and international debt investors for India. On the equity side, already we are about 82 billion last year, which in my view is low for India, because there are countries who have been getting 100 billion, 150 billion, even 200 billion. And India deserves to be there, especially in this scale of transformation which the Indian economy is heading for in this decade. India's need is far greater than 80 billion, 82 billion, which we got last year. But that's fine. And I think more will come. But on the debt side, Bharat, that is also very important, that Indian bond market is about 2 trillion. And 1 trillion is also getting open to international investors. And entry of major global indexes today is only 2% of government securities, which means that in the next, as it opens this year or next year, India will be a hot ticket for capital, that's the only large economy left where this play is still not fully happening. So clearly it means that if this happens, then all this infrastructure funding which we are talking, all the massive energy, massive roads, airports, railways, and many huge projects, metros you're talking about, this funding, both equity and debt, will happen much faster, happen much more easily. Because I think there is an opportunity of viability. And I want to actually make one point, Bharat, here to all the international investors who may be listening, that viability and profitability is at the heart of these projects. At the low prices or low tariffs, the costs are very, very low. The lowest costs in the world I have seen. And I have an infrastructure experience of telecom, so I can say that our per minute cost of telecom in India is lowest in the world. And that was the foundation based on which I built Airtel. And I'm sure many other infrastructure companies are built on that foundation. Because cost affordability, cost efficiency, productivity, and most importantly, frugality. Because of frugality, the viability of Indian business models is far better. And so there is nothing to worry for any international investor of equity or debt on the viability front.
Since you have already invoked the attention of the investors, possibly listening more carefully on this call, the economic aspiration of the competitiveness question is that I'm not at par with others, but I'm better than others. We are unlocking two things here. We are doing businesses India for India, and we are doing from India to take it elsewhere in the world. And we may have been slow in the first race of assisted intelligence going to augmented intelligence. But the journey of augmented intelligence to automated intelligence is a new space in which we can sort of take the leadership position. And these sunrise incentives in the budget I was hearing to the R&D and to the development of pure science, the attention to design and process rather than just outcome, and the big outlay that has come from government is virtually regarding them as trunk infrastructure. They would at one point in time in a smart city say, we'll invest in the land leveling and the sewage and water. You just plug and play with the power plant or whatever industrial park that you want to set up. Now the same thing's coming for automated intelligence, for the digital transformation of operating technologies. And, you're such a big investor. It's important that, we be badged for this opportunity so that more and more people can co-create, collaborate and co-create in this journey going forward.
No, Bharat, you're absolutely right. I think the innovation of business models, which is emanating from India, is remarkable. And its cost efficiency and productivity standards will be unmatched globally. And I believe that those days of India's competitive being low are over. And I want to give full credit to two things. One, India's talent, and secondly, technology availability to this talent.
Yes.
Because together, the talent plus technology is making it possible for international capital to come to this talent, come to these new business units, new ventures. And these ventures are so low cost that competitive is not an issue. Competitiveness is not an issue. It is actually, I believe that if these are scaled up 50x or 100x, they will become global companies and global brands.
No, I'm proud to share that. Yes. Yes, please go ahead. Sorry.
No, I just said it is only time which it'll take to scale up globally.
I mean,
but basic business model is very, very competitive.
I think both on design frugality as well as the competitiveness of final produce. We've been doing metro projects in India, and a few years ago it was unimaginable to sell Japanese production quoted in Indian rupees in India. We've gone ahead at the end of last year and won Washington DC's order to be built out of India, which is the world's largest metro order. And it is the most modern, automatic, high-precision engineering example of metro that is likely to be created. So the entire signaling, electrical, rolling stock body, I mean, finally that you will see there, will have a large Make in India component coming out. And I know, Aman, the time is heading towards the end of 1 hour.
Please.
But I will be not fulfilling my duty that, this is 75 years of Indian independence. The Prime Minister is talking about Amrit Kal, which is the next 25 years, when we convert arithmetic progression to geometric progression. The budget on the 1st of February already talked about the 10-year vision, the 5-year plan, the 3-year order book. Within these 2 months, we've seen ourselves, for instance, just enlisted as an engagement partner for bulk supply of a lot of infrastructure spaces alone. So there is speed and momentum. The public investments that have gone without being complemented by private investments for 2 years, and now it's all catching up, as you said. There is an energy that you're seeing in the belief and the confidence that landing on good talent and a technology that is frugal and affordable is the kind of magical mix that India will make an Indian story about its own aspiration to reach there in 2047. Maybe your closing comments.
No, what you said is so important for our next generation. I think this Amrit Kal we owe to our next generation. We owe to them a world, a country which is far more successful, far more happier, far better per capita income, far more technology focused, far more corporate governance and compliances. You know, all this together, this is a huge change which is coming, and I'm so happy that government, industry, as well as international investors are working shoulder to shoulder to do this, because this is not a small change. This is not a small transition. It's a huge transformation because it is multifaceted. And alongside, businesses have to be viable and profitable. We are not talking that, you know, anyone will subsidize any business. No, every business has to stand on its own feet. So clearly this period, and that's why a long-sighted approach has to be taken. And I'm very happy that long-sighted approach rather than a 5-year approach or a 3-year approach, you're talking of 10 years, 20 years, 25 years, which is the right thing to do at this stage for this country. If this country has to become giant, if this country has to become much bigger than it is today in terms of GDP, and I am particularly more focused not only overall GDP, but per capita GDP, which is more important, that because each citizen of the country deserves better life, quality of life. And I think clearly the Prime Minister, the government, and other leaders are very focused on this quality of life.
Yes, that is true. And I will have to make the confession, I'll not be Indian enough in my own opinion if I don't confess to everyone that I requested Aman to keep this session on the second day, because this is a urge and a call for everyone to come in. There is a new landscape. We are not seeing competition alone, but co-creation and collaboration, which is the need of this Indian opportunity getting unlocked and getting into Amrit Kal phase. Today's Navratri and Ugadi and Gudi Padwa and Ramadan and everything starting, this is the right moment to make that call. So, ladies and gentlemen, thank you very much for your attention. Manoj-san, thank you. And Aman, thank you very much.
Thank you so much, sir. Thank you so much for your time. And it was a pleasure talking to you. Also, the way you defined how Hitachi is actually setting in services, infrastructure, which is confluencing on individual as a customer, while Softbank continues to provide them with the tools for efficient access of those services. And the outward centrifugal force, I recall. And we were supposed to have Mr. Kant also, who is like an umbrella to all these services and providing the ecosystem overall going forward. But I think he's caught up in an urgent meeting. That's what I've been informed. So thank you, both of you, sir. It's an honor, absolutely, to have you and share the insights regarding the Indian economy and the path forward.
Thank you very much. Bye-bye.
Thank you, sir.
Thank you, Aman. All the best.
Thank you, sir. Bye, sir.
Bye.